Morning, Harris. How's things?
Morning, Leyton. Yeah, good, thank you. Thanks for having me again.
You're more than welcome, mate. Today we're going to talk about personal guarantees, or PGs as they're often known. Now, we're going to try and cover things like what is a personal guarantee. A lot of people I speak to, I kind of have an assumption that people understand what personal guarantees are, but similar to our last video, there's maybe a little bit of stigma about people asking for certain questions. So I thought it'd be useful to cover what is a personal guarantee, why they're topical at the minute, because there's a lot of noise in the on social media, etc., about the importance of personal guarantees at the minute, why they're important for a lender, and also why they're so emotive for a business owner at the minute.
Okay, so can you explain what a personal guarantee is?
Yeah, absolutely. So more often than not, this is when a business takes out any type of finance, a guarantor, who is typically the business owner, will step in and sign a guarantee, which essentially says if the business can't pay its obligations, i.e. the repayments of the finance, that the owner will repay them. The personal guarantee can be either unlimited or limited. Essentially, unlimited means the full amount of the amount owed to the lender, the guarantor would be personally liable for. Now, it can also be limited to a specific figure, and that's obviously beneficial to a business owner because it means that it's only a set figure that they're liable for, and that could be 10% of the facility as an example, as opposed to the whole thing.
That makes sense then. I've heard personal guarantees spoken about a lot more frequently than in recent months. Why is that?
Well, I think at the moment it's a lot more emotive for business owners, and there are a couple of reasons for that. The first one is due to the government loans that have been happening through COVID. So for the last 2 or 3 years, with C-bills, bounce back loans, and RLS more recently, the borrower hasn't had to provide a guarantee for loans up to 250,000. That's because the government has provided that guarantee to the lender.
Okay.
So almost business owners have been spoilt's the wrong word given the climate we've been in, but they've not had to provide that guarantee, which for years and years prior to, they've had to provide the guarantee. So they've had a period of time where they're not had to provide any kind of personal guarantee, and that's led to a feeling now of, well, why do we have to? The second point is, I think because of the financial landscape at the moment and the amount of uncertainty, business owners are rightly nervous about putting their personal guarantee on the line for it. Businesses have always been able to, but can now even more so, fail, sometimes due to no fault of the business owner at all. And that is a risk that business owners need to think about when they are personally guaranteeing facilities.
Okay. Some people may have the opinion, shouldn't a business stand on its own 2 feet when it comes to borrowing money?
I think that's a really fair argument to put by, but I guess the flip side to that is, why would a lender believe in the ongoing viability of a business if the business owner is not prepared to? Obviously, the business owner knows the business inside and out, and the lender is very new to the business. So sometimes that director or owner believing in the business and giving the personal guarantee is the thing that gives the lender a little bit more of comfort or that type of thing. Things that lenders consider when they are looking at facilities, there's 2 typical things. The first one is how likely is a business to go bust or fail. Now, the reality is that's never zero. It's never 0%. There's always a chance with every business in the UK. Like I said before, often businesses fail now through no fault of their own. That might be the major customer going bust, or it could be energy prices rising so significantly, lots of things. So the first thing a lender considers is the likelihood of a business failing. It's never 0. The second thing they consider is, if a business fails, how likely are they to recoup their money back? And that how likely are they to recoup their money back is where the personal guarantee comes in. It's essentially skin in the game that the owner has that ensures that the owner will help them get their money back. For different types of facility, it varies from the amount of skin in the game that's required.
So what are the different reasons?
Sure, well, like I say, it depends facility to facility. So as a couple of examples, with invoice finance, there is security in place for the lender. The security is the outstanding invoices. So a personal guarantee is taken on an invoice finance facility that in case a business fails, the business owner is on the hook to help the lender get its money back. And what that means in invoice finance is the client's customers owe the money, and so the owner's there to speak to the debtors or the customers to be able to make sure that orders are fulfilled properly, there's no issues, and at the end of the day, the business owner has a much better relationship with its debtors than a random lender does. So in invoice finance, it's to keep the borrower there to help the lender get their money back. With asset finance, slightly different. The security is the asset. So that might be a car, it might be a piece of machinery. But the fact that somebody's personally liable at the end of it means that maybe that person keeps the asset in better condition. So if something does happen, the asset's worth what it needs to be worth to be able to recoup the money. Now, if you think about having a car, obviously you can look after a car and wash it every weekend and look after it and oil check. Is that a thing anymore? Or you can just drive it till the wheels fall off. Now, from a lender's point of view, obviously they want the first person, not the second person, because if there's a problem, they want to be able to sell a good asset to recoup their money. There might also be an occasion where, if it's a piece of machinery, that the borrower knows people in the industry who might want that machine. So the personal guarantee is a way of keeping a client, again, on the hook to help recoup the funds for the lender.
Okay.
The final example is an unsecured business loan. So an unsecured business loan, like the name suggests, doesn't have the debtor book or an asset as security. It's unsecured. When I say unsecured, it requires the directors to provide a personal guarantee. In that instance, if the business fails, then there are no other assets other than going to the director. So typically lenders will look very keenly at a director's asset and liability profile before it makes a decision on a business loan, because it knows that if it does go wrong, the only recourse is back to the borrower, the individual, not the company. So Harris, that's the case for the lender. Why shouldn't a borrower look to provide a personal guarantee?
Well, going back to the idea of how a company might stand on its own 2 feet, having a limited company is meant to limit the liability of the owner. And if we want to see entrepreneurialism thrive in the UK, part of that is allowing the business owner the freedom to make mistakes, but then learn from their mistakes and not be under the financial burden that the personal guarantee offers.
Yeah, absolutely. So, whichever side of the fence you're on, whether you believe that lenders should ask for PGs or that borrowers shouldn't be required to give PGs, the reality of the current landscape is most lenders are looking for personal guarantees when they are looking to write facilities. Working with a good quality broker can help mitigate that. Brokers are able to use their influence with lenders and also package a deal in a way that helps the borrower, helps the lender to understand that a personal guarantee is not required in all cases. Thanks guys, really appreciate you watching the video and we'd really love some feedback in the comments. Thank you.